Hello, welcome back to Retire with Oakleaf. My name is Vasily or just V, and today I'm sitting here with our founder and investment manager, John Sweet.
We have been getting a lot of questions from our new clients around AI. Do we have it in portfolios? How do we think about it? Do we think it's an opportunity? Is it a risk? And we thought that would be a great topic for a discussion with V and I, talking about the ways that we think you should approach AI in your portfolio. So without any further ado, I'm just going to turn this over to V, and here are the types of questions we've been getting.
Thank you, John. So first and foremost, John, when clients ask us, what is AI? What is the right response to that? What is AI? It means different things to different people, but how do you answer that question?
That's a great question. I'm going to start with, I think, the way most of us think of it, and that is computer learning, right? It is machine learning in some form. But I went to Grok and I asked that question, and I got a really good answer, so let me share that with you. AI is tech that mimics human thinking, like learning, problem solving, and decision making to handle tasks smarter and faster than us. It is a tool that analyzes data, sports pattern, predicts trends, and automates work routine, freeing us to do other tasks. It certainly is on everybody's mind at this point, especially in the investing world, as we've had a couple of years with ChatGPT and Grok and different tools that we are using in our practice. We have seen a really good run-up in certain companies in certain areas of the stock market that now we're also getting a lot of questions on in terms of valuation and where do we go from here.
Thank you for that, John. So now we know what AI is. The next question is who? Who is AI? Who are the companies that creating this technology and these mega brains around the world?
Great question, V. I think that's changing on a daily basis, but I think most of us, when we think of the AI companies, we're thinking of what we call the hyperscalers. These they are the large internet companies that we've come to know and love, the Amazons, the Googles, the Apples, the Netflix, the Nvidias, and Metas. These have been companies that have been highly profitable with huge margins, because they did not have a lot of infrastructure. They were essentially software type companies. And that is changing now as these large companies have decided that it is that AI is an existential threat to their existence, that if they don't become the best at AI, they are going to lose their market share. And so I think traditionally that's what we think of. They're spending huge amounts of money on infrastructure build out. Some reports say that it's maybe 50% of GDP right now. But I do think that's also changing. I think that what is happening now is that AI is coming down into other types of companies. They may be the companies that are responsible for housing the computers and building the models and training the models. But now it is starting to kind of seep down into everyday companies.
So John, now after we've kind of like established what AI is and who some of the main players of AI are, next question is when? When is this AI promise of revolutionizing the world going to appear, and when is it going to be realized in real investment returns for years to come?
So V, that is the $64,000 question, and I would say that it is appearing already in certain areas, but nobody knows for sure. There is, obviously, we all know there's a lot of opportunity. We think of, the age of abundance, the things that we're hearing around the positives of AI that transform our lives. We've all heard positives and we've all heard negatives along those, but from an investment point of view, there are risks and there are opportunities, and that's how we want to think about these things from the point of view of our client portfolios. There's a wonderful academic economist, Carlotta Perez, who is known for a lot of different things, but one of the things that she talks about is this potentially being an industrial revolution in technology. And she draws parallels to other industrial revolutions. What lessons can we look at from those and apply now? And one of those would be that in order for a large technology to kind of become important and take over and change the world, there needs to be a lot of investment. It's kind of a boom-bust cycle, that there's a lot of infrastructure that was needed for the trains, a lot of infrastructure for the IT spend during the internet, and that beginning part of the AI stage that we're in could lead to some type of a difficult period because we're spending a lot of money on these new facilities that are going to take a lot of energy. Nobody knows for sure. We're also hearing and feeling applications or using applications already. We use AI in our practice, as you know, but there are some really interesting use cases coming out. I heard about a company that is transforming the hearing aid industry, where I guess that if you have a hearing aid, kind of if you're in a noisy room, it can be very difficult to kind of be able to hear somebody who's speaking to you closely. And what AI has done, a new company has transformed this by using AI to kind of delineate between from people talking and background sound. And as well as there's a prediction that next year at some point, AI should be able to be undistinguishable. A video on TV talking should be indistinguishable for us. It'd be very hard for us to tell, is that John Sweet or is that an AI John Sweet? Which, has amazing implications when it comes to client service. My wife and I had a conversation yesterday with our cable provider. We'd called them 6 months ago, and they were billing us incorrectly, and we've called them 3 times, and finally we got yesterday on a call that we were both listening to, and it was an outstanding call, and we both were convinced it was AI. The interaction was outstanding. We got our questions answered. They went through what they needed to do for us to make us feel like they were going to address our needs, but we were pretty sure it was AI. So I think that some parts of AI may be closer than we think, and some parts of AI may be longer away. And that really leads to the idea of how we think about AI in client portfolios. And this may be the most important part of it, because you can go back to different eras of new technologies, and what started the era that everybody thought was going to be the winners turned out not to be the winners. So I think that in this situation, having a financial plan, in my 40 years of helping clients, I don't think a financial plan has ever been more important. Is when you sit down with clients and you look at the bucket approach, which is our cash flow management, making sure that clients have 5 to 7 years of liquid resources available. This could be a situation where we experience everything that we are hoping for, but it could take longer than we know. And so what happens if we do have a downturn in the economy? We need a plan to be able to stay the course. That I thought was absolutely outstanding. They took 2 years to look at AI and technology revolutions. They went back and did a lot of research. And their analysis is that there's a 60% chance that we have a 10-year period or longer of 4% GDP. That AI kind of seeps through all the companies in the country and makes all companies better. That would be amazing. I mean, we've gone 30 years at about a 2% GDP rate, so having a 4% GDP would really be beneficial to everybody. They also gave a 30% chance to the idea that AI is a flub. It's not what we think it's going to be, or it takes much longer to actually realize. And in that situation, we have a lot of debt, and they look at the stock market as being vulnerable and high interest rates potentially being an issue. So from a financial planning point of view, it's never been more important to be able to say, what are my needs? What are our needs as a family? And how do we plan for not only being able to take advantage of what AI delivers if it does, but also if it takes longer or it's not quite what we think. We don't want to have our retirement or our goals derailed.
Excellent. So John, to sum this up, what is our overall take on artificial intelligence in regards to portfolio and investments?
V, I think there's, as we all intuitively know, a huge amount of opportunity. I think we also know that there is potentially a huge amount of risk with, boom and bust cycles. And again, I would reiterate, you absolutely want to take advantage of a portfolio management team that takes advantage of AI and has a direction in AI. But I think understanding your financial plan and knowing that you have a plan to get through difficult times to sustain a long-term investment horizon is maybe as important now as it's ever been. Maybe AI, blossoms this coming year in 2026. Maybe it doesn't. Maybe it takes another 5 or 7 years. I think you need to be able to invest for the long term on this to most likely reap the benefits. At least that's our philosophy.
Got it. So it's important to review your financial plan and your cash reserves and be ready for an extended period of time before AI comes to fruition in a mass scale.
I think cash reserves, making sure we've all seen a great 3-year period. It's been wonderful, but neglecting your cash reserves, you want to be able to stay in the market for long periods of time. And if your cash reserves are not adequate for a difficult 1, 2, 3-year period, like we experienced in the early 2000s, you can miss out. I'm not saying I think it's going to be a long-term investment horizon for AI or a short-term. It's just, what do we plan for? We plan for the worst, hope for the best.
And this is a little bit about us and artificial intelligence, how we view it and how we typically advise clients to think about it and think about it through the lens of their portfolio, their investments. See you soon.